Welcome back to another episode of Tax Chit Chat, the place where we talk all things tax all the time. If you're a regular subscriber to this channel, then this video is going to have a slightly different feel than our normal videos. Why? On Thursday, March 11th, the president signed the American Rescue Plan Act of 2021. So most people are familiar with this because of the round 3 of stimulus payments. However, there are two things that could impact your 2020 tax return, and I wanted to make sure this video got out so that if any of those two things impacted you, you could make sure that you either put the brakes on filing your return or know how to deal with it going forward. So I will get to the stimulus that will be talked about in the middle of the video, but let's talk about those two things first. Let's go. All right, so let's talk about your 2020 tax return and the impact the American Rescue Plan Act is going to have on them. The first thing to note is that all of this is very fluid at the moment and things are constantly going to be changing. So make sure you check out the description to this video, like this video so that it shows up as a favorite. So you can come back and look for all the updates as we update this video description as things become available. The first thing to know for your 2020 guidance, meaning if you filed a 2020 tax return or will be, the IRS is strongly urging taxpayers to not file amended returns related to the new legislation provisions or take any unnecessary steps at this time. The IRS will provide taxpayers with additional guidance on those provisions that could affect their 2020 tax return as soon as possible. First up, unemployment. So as an extension of the CARES Act, weekly unemployment benefits have been extended through September 6, 2021, with a weekly benefit amount of $300. Now, the first $10,200 or $20,400 if you're married filing jointly of your unemployment benefits for 2020 will be non-taxable for taxpayers with an AGI or adjusted gross income of less than $150,000. If your adjusted gross income is $150,000 or greater, then the full $10,200 or $20,400 of unemployment compensation becomes taxable. Now, for those who haven't filed yet, the IRS will provide a worksheet for paper filers and work with software industry to update the current tax software so that taxpayers can determine how to report their unemployment income or their 2020 tax return. And for those who have already received unemployment benefits last year and have already filed their 2020 tax return, once again, the IRS emphasizes that they should not file an amended return at this time until the IRS issues additional guidance. The second thing impacting your 2020 tax return is the premium tax credit. So for 2020, there is no repayment being required for taxpayers who received excess advanced PTCs. So for those who were receiving healthcare through the marketplace and received the advanced premium tax credit, usually you have to have a repayment if you received too much. So for 2020, that is being waived, all right? And if a taxpayer receives unemployment compensation, they can use the rates as if their income tier is 133% of the federal poverty line. The bill also reduces healthcare premiums for low and middle income families by increasing the Affordable Care Act premium tax credit for 2021 and 2022. So it doesn't apply to 2020, but just realize that in 2021 and 2022 is going to reduce their premiums, okay? And once again, the IRS strongly urges taxpayers to not file amended returns related to the new legislation provisions or take any other unnecessary steps at this time if they've gotten excess PTC on the 2020 tax return and potentially would have had to repay it. So they'll be issuing guidance about that soon, all right? Now, for stimulus or economic impact payment round number 3, the payment is going to be based on the taxpayer's latest processed tax return from either 2020 or 2019. The third round of stimulus payments, which were authorized by the American Rescue Plan Act, differ from the earlier payments in a couple of different respects, okay? So generally speaking, the third stimulus payment is going to be larger for most people. Most families will get $1,400 per person, including all dependents claimed on their tax return, okay? So this means that a single person with no dependents will usually get $1,400, while say a family of 4, a married couple with 2 dependents would get $5,600. Now, unlike the first 2 payments, the third stimulus payment is not restricted to children under the age of 17 with regards to being a dependent. So eligible families will get a payment based on all of their qualifying dependents claimed on their tax return, including older relatives like college students, adults with disabilities, and parents and grandparents. Now, who's eligible for those third stimulus? Well, if you're a US citizen or a US resident alien, You're eligible for the full amount of stimulus. If you are not a dependent on another taxpayer and your adjusted gross income does not exceed $150,000 if you're married, filing joint, $112,500 if you're filing as head of household, or $75,000 for individuals using any other filing status such as single or married with separate returns. Now, if your income is above these thresholds, then you will not receive any third stimulus payment. So for those who are married, filing joint, if your income exceeds $160,000, no payment. Head of household, $120,000, no payment, and $80,000 for all other statuses like single and for married, filing separate. Now, the last thing, these items are not going to impact your 2020 return, but I did just want to quickly highlight some things that are going to be impacting your 2021 returns as a result of this bill. So the child tax credit has been expanded. So there are going to be special rules for 2021 that include an expansion of the credit from $2,000 to $3,000 per eligible child under the age of 18. And if the child is under the age of 6, then that credit gets expanded to $3,600, okay? And one thing to note is that 50% of the credit is going to be issued as an advance payment starting in July of 2021, and then it gets reconciled on the 2021 tax return. So for example, if you have a child who's under the age of 6 and you're eligible for the $3,600 credit, you will be able to get $1,800 of that advanced as a payment to you. You'll receive payments for that starting in July through December. Now, with regard to the earned income credit, the minimum age to claim the EIC for taxpayers without children is reduced from age 25 to age 19, except for full-time students. The maximum age limit of 65 for claiming the childless EIC has been eliminated. The credit and phase-out percentages have been increased from 7.65% to 15.3% for an individual who doesn't have a child. And lastly, taxpayers may use their earned income from their 2019 tax year to determine their EIC for the 2021 tax year if the 2021 earned income was less than the 2019 earned income. No, it is a mouthful, but basically what that means is that if your 2019 income will qualify you for a greater amount of the credit versus your 2021 income, you can use 2019. So anybody who had lower income in 2019 might be able to receive the credit. The last thing is there's a provision for student loan forgiveness or student loan debt forgiveness. So it provides a special rule for the discharges in 2021 through 2025 that the forgiveness or the discharge of student loans as cancellation of debt is not going to be included in the gross income.
And if you found value in this video, then please consider giving it a thumbs up or subscribing to the channel. Just make sure you click the little bell icon when you do. That way you'll get notifications of all future videos when we upload them. So like I say at the end of every episode, until we meet again, keep earning, keep learning, and just like that, this chat is adjourned.